Thank you everyone for joining in and making the time today. So we are joined in today with Mr. Jagadeesh Mohan, and our today's session is on mastering home loan savings, how you can save a lot of money on your home loan interest and savings both. So Jagdish Mohan is a co-founder of EMI Saver. It's a platform which simplifies home loan journey for a lot of families, helping them save on interest and reduce EMIs and gain financial flexibility through smarter home loan management. How can you manage home loans smartly? So before founding EMI Saver, Jagdish spent almost over 7 years at PhonePe, where he held leadership roles include director of strategic projects and chief of staff, and he drives the scale for merchant lending and their share market platform too. He's an MBA graduate from SPJ Institute of Management Research. He brings over 15 years of work across a lot of leading organizations such as Flipkart and Accenture. Through his startup EMI Saver, Jagdish is aiming to help homeowners make a better loan decisions and become debt free faster. That is what is most important. So Jagdish, thank you so much for joining in, and let's get started. Over to
Uh,
you, Jagdish.
yeah, thanks, Anil. Yeah, that's a fairly long intro. I've never heard myself being introduced in that fashion. So
Okay, okay.
thanks a lot.
Yeah.
So quickly, I'll not take much time. I'll kind of directly head over to the presentation so that we have a lot of people in. Just
Yes, yes, yes.
uh, So the idea of today's session is to first obviously introduce ourselves as to who we are and how do we have an authority to even have a point of view on home loans. Uh, what are the various loan optimization strategies that are available in the market today, and how can overdraft home loan kind of solve some of your problem statements? We will also be taking over live examples. If the audience has certain situations that they would like to share, I'm happy to take up a few live cases and show how overdraft product can work for them. Finally, we'll have at least a 30-minute of Q&A, so I can go through many more questions and answer those for you. Uh, so getting started with who we are, I think Anil has already given a very detailed introduction. I would also like to take this opportunity to introduce my co-founder, Vinay. He's also there present on the call. He's a CA. He's a CA by profession and has been working in the financial markets for more than 12 plus years. Also, he happens to be my old flatmate and a very dear friend. So obviously, when I was looking to start up, kind of ended up our paths crossing. So at EMI Saver, the idea was first to build something innovative, and over the last 1 year, what we've realized is that the biggest value we are giving to our customers is clarity. We are helping people take better decisions around their home loans by educating them. We explain in very simple terms how a home loan works. Now, this is one of the biggest expenses or purchases that you will do financially. But all the steps involved, all of those details or the processes involved, you don't have an option to have a discussion with multiple people. So that is where what happens. That is where what happens is that you have to. Sorry, just 1 second. So that is where what we try to do is simplify everything and all the steps that are involved. Now, what we felt that was missing is that there's a vanilla offering that's been given out to the customers. Everyone's journey is different. Everyone's aspirations and belief systems are different. It's important to understand where a person is in their journey to actually take a decision on how much loan value to take, what tenure to be taken. Finally, what we do is we give a very objective and crisp option to the customers to make an informed choice. Now, this is where we are, and what we end up help people doing is build a practical plan, a plan that will work for you. We do an annual check-in to ensure the rates are optimal throughout. And we are a lifetime partner because we look at it as a relationship. And lastly, we help manage an end-to-end execution. We do all the paperwork and the negotiations. We've already done 250 plus individual sessions. We have helped almost disburse 50 crore plus worth of loans so far. Sorry, this was just an introduction about EMI Saver and what we have been doing so far. Going forward, it's completely on home loan optimization. So when we talk about optimizing something, right, it's very important to set a goalpost. Okay. Optimization means solving for a particular problem statement. So for that, it's essential we establish a goalpost. So this goalpost could have multiple dimensions. For example, financial angle could be I want to pay very less interest, or I want to just get done with the loan faster. Like for example, you could take a loan for maximum possible amount and maximum tenure. What this helps you do is save up on EMI and make investments in markets or some other places where you think you can make more money. Or you could say, I'll take loan as much as required. I will also not prepay it. I'm okay with the interest that is there, but I just don't want to stress myself out. Or if you're stressed, you might also say that I want to take minimum possible loan and I will prepay quickly. Now, depending on your risk appetite, you could be in any of these buckets. Okay. And this is only the financial angle or the financial perspective of looking at a home. There is also an emotional angle for looking at optimization. For example, if you are a very seasoned real estate investor, you will be like, give me as much loan as possible. If you are probably first or second time loan borrower, you will be probably a little uncomfortable with loan because when you have a 1 crore home loan on your name, it adds to the stress. Or some people, for the first loan, especially a high value loan, you can be very stressed. So there is this emotional angle as well in play. So what we've discovered over a period of time is that based on both of these considerations, we ask the customer to answer, when do you realistically want to complete your loan? Set that as a goal. Like you can take a loan for 25 years. You want to complete it in 5 years, 10 years, 15 years. Then what are your current liabilities and risks? Like, do you already have other loans running? Do you have dependents in family, like your parents? Or do you have someone with medical expenses that is running? Once we understand that, we help you choose a strategy. Like, for example, if you are looking to close faster, we try and understand how much can you prepay on a monthly basis. Where have you invested? But if you say, I want to maximize my return, we spend time to understand how much and where do you plan to invest that money. Do you have a safety cushion? Like in case, let's say you invest in markets tank, do you have the financial cushion at your disposal to actually save money or to save yourself in that situation? There could also be a third approach where you can say, you know what, sometimes I'll have bonuses, I will prepay, otherwise I'll just on a good path. That's also completely fine. So these are different approaches for solving a same problem, which actually come to think of it is peace of mind. You want to get to a place where you are comfortable, you can sleep peacefully at night. So with this, we'll talk about the tools for optimization of a loan. Overdraft home loans. This is also called as Max Gain, Money Saver, Max Saver, Max Advantage, Star Smart. Different banks offer this with different names. So let's understand. Okay, now a common man might have money in any of these instruments. Like for example, savings may you could have 2%. You would be earning 2% post tax, and you typically would keep money here for your monthly expense. You would have money in your FD and RD. Post tax, typically you would make 5%. And in general, a financial planner would recommend to keep short-term and emergency funds here. Similarly, mutual funds can be used for your long-term goals. Direct stocks are much more volatile, but they are also considered as a long-term investment. Some people are comfortable with gold and chit funds. Now, what combination of this works for you is a very personal decision. It is influenced by your family. It's influenced by what your experience has been. If you've been investing in gold and been getting great returns, no matter what, you will believe in that one. So once we have an understanding of this, let's come to a home loan. Now, when you take a loan from a bank, a home loan, the loan will cost you 7.5% to 8%. And you also end up parking some money in your savings account, which is at 3.5%, 3 to 5%. If you keep it in your savings account, you'll maximum get 2.5% to 3%. Or if you keep it in an FD, it's at 5%. Now, funnily, in both of these cases, the money is still with the bank. You're taking money from the bank. Let's say it's SBI. You borrowed money from SBI, and then you've kept money again with SBI. Okay, but you've borrowed at 8%. You're parked or lent money to the bank at 3 to 5%. Now you're okay with this because you want access to that money. You want to be able to withdraw that money at any point in time. Okay. Now for this comfort of accessing this money, you are happy to lose 3 to 5% of the return. Okay. Now this is what is an observation on our side. Now what if you could prepay with that money? Now whatever money you have kept as an emergency corpus or you've kept for your reserve, and you also retain the flexibility to withdraw that money whenever you need. Now, what if you could get the best of both liquidity and returns? Like you could get a savings account liquidity and you get the returns of, let's say, an FD or better than FD. Now, this is exactly what a max gain loan account does. I'll explain it further. Now, in max gain, what happens is you can prepay in the good times, withdraw in bad times. Now, in general, when you make a prepayment, right, it's a one-track journey. You make the money in, let's say it's a 20-year loan and you've been prepaying for, let's say, 5 years. And let's say 1 year you lose your job. Now, all the money you prepaid, right, you can't withdraw it back or it can't help you in your bad times. But in max gain, you can prepay in your good times. And let's say at some point in time, you do need the money you prepaid, you can withdraw it as well. You can get more out of your safety money. See, everybody has a definition of what money gives them comfort. For some people, having 5 lakhs in their savings account gives them peaceful sleep. Some people, that number could be 10 lakhs. For some, it could be 15 lakhs. But for different people, there is that safety money that exists. And on this safety money, we make typically 2 to 3%. We help you maximize the returns on this. So, depending on the problem statement that you pose, MaxGain can be used to solve that problem. Now, let's take how does it exactly work. Okay. Now, like a regular home loan, a loan account is created, home loan account is created, and it will be linked with a savings account. Now, let's say it's SBI, you will be given an account, a loan account, and then there is a additional account called OD account that is created with it. Now, any amount that you will put in this account will be considered as prepayment against the loan. But the good thing is there is no lock-in on this one. Let's say you took the loan and you parked 5 lakh rupees today. 1 week later, you can withdraw the entire 5 lakh rupees. You have complete access to that money. There is no limitation on usage. And how many ever days you keep that money in balance in that one, interest will be saved for that. What happens is your EMI is fixed because this loan is a fixed tenure loan. So what happens is your tenure gets reduced. Now, whenever in a home loan, if you make a prepayment, either your EMI will reduce or your tenure will reduce. So in this case, EMI is fixed, so tenure reduces. So as a ballpark number for your reference, if you have 1 lakh in your savings account, it will help you save 3 to 5 lakhs in interest on the home loan. Now, I'll take a very simple example. Let's say Raj took a loan of 1 crore with SBI at 8%. Okay. And Raj also had a 10 lakh rupee worth FD, in which post-tax he was earning 5%. Same again with SBI itself. Now, what Raj has to do is, he has to close the FD and move the funds into an overdraft account. Now, what will happen is, on a daily basis, bank will charge him interest only on 1 crore minus 10 lakhs, which is 90 lakhs. Instead of charging him interest on the 1 crore, only on the net amount, which is 90 lakhs, bank will charge him interest. So now, instead of 8%, he's actually saving 8% instead of earning 5%. If he had kept this money with SBI, what would happen is he would have earned 5%. But now, if he keeps it in this OD account, he will earn 0%. But the bank will waive 8% interest that is being charged to him. Now, just take a guess on what does this 8%, 5% saving, okay, what is it that he'll actually meaningfully save? Is that even meaningful for all of you? So, for every year, he'll be saving 1.16 lakh as interest. Okay, and over the period of this one, he would have saved a significant amount of money by doing this. Okay, let's try out one example with our calculator. Okay, now let's take the same example. The customer has taken a loan of 1 crore and the rate of interest is 7.5% and he's taken it for 25 years. Now, the EMI works out to be 73,899 rupees. Okay. Now, over a 25-year period, if he pays the 74,000 for 25 years, he would have repaid 2.21 crores. Now, in the max gain situation, let's say he has a max gain home loan is also at 7.5%, and he has an emergency corpus or safety money of 10 lakh rupees. Okay. Now, how much money does it get saved? Okay. His loan is now completed instead of 25 years, it's completed in 19.2 years. Okay. And he's actually going to save 26 lakhs in interest. That means instead of paying 2.21 crores, he would be paying somewhere between 1.96 crores. That's a significant amount of saving. 26 lakh net money saved for the customer in their bank account. Okay. Now, how does this happen? Okay, that's a very logical question on how does this work. Have I just populated something? So I'll walk you through the maths behind it. There's a very simple math behind it. Okay. Now this 10 lakh rupees, there are two parts to the saving that happens. Okay. Saving number one, which is very direct and evident. Now, the moment you park 10 lakhs in this 10 lakh is considered as a prepayment by the bank. Okay. That means on this 10 lakh rupees, you will save 7.5% interest upfront. Okay. And that will compound over a longer period of time. Okay. Now, there is a second part of the saving which a lot of people don't realize. Now, let's take this case. In the regular loan case, 1 crore loan, 7.5% interest, you paid 74,000. In this case also, your EMI is fixed at 74,000. But like I told, you needed to, according to the bank, you have already prepaid the loan by 10 lakhs. So the bank will consider in its accounting system 66,500 as the EMI that it should charge you. Okay, because on 90 lakhs for 25 years at this one, the revised EMI is 66,500. But what the bank is saying is, this is a savings account. And any money in savings account can be put today and removed tomorrow. So since it's giving you the flexibility, what it is telling is, I will hold the EMI fixed. I will charge you 74,000 because it knows that you can afford to pay 74,000. It has done all the due diligence. So it is like, I know you can afford to pay 74,000. I take the 74 and the 7,500 extra that is there, I will take it as prepayment against the principal. So by paying the same EMI of 74,000, you are, from the bank's accounting perspective, making a 11% prepayment, additional payment. Now, what happens when we do prepayments? The principal gets depleted faster. And as you keep making these payments, what happens is, instead of 300 EMIs, you end up paying only 230 EMIs. And you end up saving 70 EMIs net. Okay. On the cash flow basis as well. Like, how did the savings number come in? I'll walk you guys through that as well. So what happens in a regular case? You have taken a principal of 1 crore. You have to repay the 1 crore back. The total interest generated is 1.21 crore. Okay. And hence we arrived at the number 2.21 crore. Now what happens in this case? In this case, you have already parked 10 lakhs as prepayment. Now that 10 lakhs along with the 90 lakhs that you prepaid is considered covers the principal of 1 crore. But if you look at this one, interest generated, in this case it was 1.21 crore. Here it is only 80 lakhs. So you have technically saved 41 lakhs of interest from getting generated for you. Okay. 41 lakh 84,000. Now, if you actually come to think of it, but I've told net saving is only 26 lakhs. The reason why I have mentioned that is, this 10 lakhs that you keep on the OD account, right? It earns 0% interest. It waves off 7.5% interest, but it earns zero. So notionally, we have assumed a 5% post-tax return for this money. You would have still earned that, right? So I have assumed 5% of this 10 lakhs over a 19.2-year duration. That number comes to 15 lakh 47. This is the opportunity cost or interest that you lost by not keeping it in FD. Now, if I add all the expense on this side, it comes to 1.95 CR. Here it is 2.21 CR. So if I do a calculation, you are actually cash flow perspective, money out of your account, you are up by 26 lakh 37,000. Okay. So if I look at it from any dimension, your tenure has now, you are paying the same EMI, 74,000. You are keeping your idle funds in your emergency corpus. You would have kept it. You still have the same access. So you're getting the same freedom of accessing that money whenever you want. You're paying the same EMI. But now just by upgrading to this product, you have now kind of saved 6 years in tenure. You've reduced your loan by doing nothing extra. No money, no additional prepayment. You have still managed to reduce your tenure by 6 years. This is the beauty of MaxPay. And this is what kind of got us excited to start this journey. Now, there are different ways you can look at it. Now, one common question that people always have, and if you ever walk to a bank also, right, the bank will typically discourage you from taking this product. Okay. The main reason is this 26 lakhs that I've shown to you as savings, right, is if it's a zero-sum game in a home loan. If you are saving money, the bank is losing money. Okay. So it's very rare. So if you are going to be using this smartly and saving more money, the bank is going to lose it. So bank is not going to be super excited for you to take this loan. Okay. So what the bank does is that bank charges a premium for this. It is telling that, okay, I'm giving you this flexibility, so I should be charging you this for this feature. So the bank will say, I will charge you 0.25% extra. Okay. Now, in this case, let's say the bank charges you 0.25% extra. Now let's see what happens. Your savings came down. You are no longer saving 26 lakhs, you're saving 24 lakhs. But although 0.25% moved up on the entire loan, you still are saving 24 lakhs. This is the power of this product. The problem is, in general, what we think is the first part of the saving, which is 0.25% additional on 1 crore versus, let's say, some 2.5% saving on this 10 lakhs. This math is not common math. A common man can't come back and understand this way or that way. Once we built this tool, once we reconciled this with live bank account statements and got comfort with it, that's when we actually went ahead and published this out. And that's when we got the comfort that this product makes sense. This makes especially a lot of sense for people who have home loans running and are looking to, let's say, do a balance transfer and debating whether it makes sense for me to do a balance transfer or not. Whether it, can understand this math, does it make sense to, kind of upgrade to this one? Now, when you do a balance transfer, right, there are costs also involved. So the first and the most common reaction that we used to have was, okay, looks like a very good amount of saving. We also thought like people would be super excited and go, but then there are transfer costs involved. Okay. Like for example, if you let's say take a transfer cost for, let's say, for moving out of SBI, okay, most of the times processing charges are waived off, but then there will be some legal and valuation cost that will be involved. There is this number changes, this total transfer cost number changes state by state depending on the charges and the government regulations around it. But like for example, I can talk about Bangalore. In Bangalore, the charges are 0.6% towards MODT. That's one of the biggest challenges or inertia causing problem ones. But if I actually look at it, it's costing, if I do all in math, it's still costing 45,000. So the math for a customer is you have to invest 45,000 to upgrade to a max gain loan account and end up saving 24 lakhs over 19 years. Okay. So depending, so the answer will change. Does it make sense for this person who has 10 lakhs? Definitely. But let's say the total amount that you keep is only probably 2 lakhs. He's saving only 2 lakhs over a very long duration. So probably for that customer, it doesn't make sense. Okay. So what we've done is that we have put this out here, this calculator. We have created a digital version on our website, emisaver.com. You can go and try the calculator. It will pop out and give you these calculations. Simple one click, no mess calculations. So you guys can go ahead and play around with it for numbers and determine whether it makes sense for you or not. Typically, 0.6% to 1% will be your transfer cost. So you can plug your home loan ka outstanding number. Is there any other thing that you're looking for? And then based on that, you can do it. Okay. Now coming to, let's say, I think one of the questions that popped up also was that the additional charge. So I've answered that where there is an additional charge involved. What is the, it's still, why it still makes sense even if there is an additional charge involved. Now, what we also discovered, and this is not common knowledge, is that there are banks that offer this without an additional charge. Now, if you actually come back and look at this table, so for example, SBI, most of the loans end up between the new loans end up at 7.8, 7.95. Max gain, they charge 0.25% extra, which will probably end up at an 8.2% kind of one. Okay. Sometimes there will be some concessions. See, these numbers are still indicative. Every month there is a new scheme. There's a new concession plan that is in play for different CIBIL scores. Based on that, they typically change the final rates. In Bank of Baroda, if you take a loan up to 75 lakhs, they will not charge this 0.25%. Okay. If you are taking this product, max gain product, they call it as Star Smart Saver, up to 2 crores, they don't charge a premium for it. ICICI typically will always charge 0.25. Axis will typically charge 0.5. Bank of Maharashtra charges 0.25. Now, so what happens is, depending on the CIBIL score, okay, all of these banks will have a different rate card. I'll show you a sample rate card for your reference so that you understand how the banks calculate actually. Okay. Now see, this is a Bank of India's scheme letter, which basically says if your CIBIL personal score is above 840 and above, the bank will have this formula. Finally, you will end up getting the loan at 7.35%. Okay. If it's between 825 and 839, you will get 7.5. 800 and this is 7.5, 762, 7.65. Now, this is the board rate that they'll give. Then there are some concessions that they give. Okay. Now, for example, here what Bank of India says is, if you are doing a balance transfer, a 0.1% concession is possible. If you are a central, state government or PSU employee, a 0.1% discount is possible. If you take an insurance associated with a home loan, another 0.1% is there. But at any point in time, you'll not get all three, you'll get only 0.1% concession. And the lowest rate would be 7.35%. Okay. So like this, every bank will have a rate card, which we as their authorized service providers will have access to. So what we do is, whenever you do a session with us, we understand your requirement. We look up these rate cards, check your CIBIL score and use this out, and help you actually arrive at what is the rate that the bank will be offering you. Okay. So we were here. Okay. I'll take a pause here, and if anyone wants to try out live numbers, like, I'm happy to play around and do that.
I think so, Jagdish, that will be a bit hassle. We can complete the presentation and maybe then move on to question and answer. And in case if there's time, we can come on over here.
Okay, sure, no worries. So, okay. So broadly, one, you have to determine what is the home loan value that you have to take, what is the amount you want to take. what is the tenure you want to take, and then finally based on that we can decide which bank you can choose the loan from. Okay, this is a function of your CIBIL score and bunch of other things. Like even the rate of interest, is composed of multiple parts. One is the repo rate. Okay, this is determined by RBI. Okay, and is refreshed as part of their policy. Currently, RBI has reduced it in this last 1 year. It is reduced it from 6.5% to 5.5%. Okay, spread. This is the bank's margin. This is the profit that the bank is trying to make on a particular loan. This will be typically between 2.5% to 3%. Then this is the only one, the risk premium. This is the only thing that the customer controls. It is a function of the CIBIL score. Now, as you keep taking loans and repaying them on time, you will build a credit history, and then your credit score will improve. Once it improves, the bank will give you a concession. Will give you a discount on the risk because you're not a risky customer for them. The last part is concessions and seasonal concessions. Bank will then end up charging you, will be giving you a discount on it. So finally, this is how your final rate of interest will be decided. Okay. Now, some of these interesting things that people have done with this product. Okay. Now, let's say someone had the money. Okay, you had a 1 crore loan that you wanted to take. You already have, let's say, 80 lakhs of that money. You can actually make the entire down payment also. So one very smart chap, what he did was, he took a loan for 75 lakhs. Okay. And then he ended up parking 75 lakhs also in that savings account. Okay. So now what happened was that in that house, he's no longer paying the interest on that home loan. The bank will every month, like, let's take the same example. The customer took a loan of 1 crore and in the savings account parked 1 crore. Okay. So technically on day one, his loan is over. Okay. He has saved 1.21 crores. That is basically the entire interest that he had to pay. He saved that already. Okay. But then how will the loan look like? So the loan will be every month, 73,000 or 74,000 will move from his savings account to the loan account as payment. And over the next X number of years, the loan will get run down. But the advantage for him is that his loan, his access to that money. Now the 1 crore, if he had paid directly to the builder, he cannot ever get that money back. Okay. But if he's taken a home loan and parked that money, what is happening is now he has flexibility. He has access to that 1 crore on demand. Let's say tomorrow he wants to buy a car. He can take money out of this and pay this over 20 years duration. Now, let's say there's a medical emergency. He can take money out of this and make those payments and get back. If he has, let's say, want to buy a plot of land, getting a loan for a plot of land, let's say, especially on the outskirts of the city, is hard and expensive. He can actually take money out of this and put the money there. Okay. This is one type of optimization or customization that people can do. The other one is, let's say you actually have a current loan which is running for 15 years and it's at 92,000 EMI. Now your monthly budget is getting tight. Okay, you're like, yeah, Jagadeesh, I can't, like, hand to mouth, it's becoming at the end of the month. So what you can do is, depending on your age and bank, you can actually go all the way up to 35 years. 35 years of tenure on the loan, which can go up to age-wise up to 75 or 80 years also with certain banks. What happens is, in that case, you're saving almost 15 to 20,000 rupees you are saving here on your monthly EMI. Now, this might be a good strategy if you have a short-term or medium-term problem. Like next 3 years, you're expecting some cash flow to get sorted out. Let's say you're expecting some property to get disposed and you're expecting money to come in. This is a good hack to solve for your here and now EMI problem. Okay. Okay, I'll just explain the 1 crore example again. Now, let's say you had to buy a house for 1.5 crores. Okay, and you could take on 1 crore, you have an option of taking a 1 crore loan. Now, on this 1 crore loan, you park 1 crore which you had and you're going to make the payment to the builder. Okay. Now what happens in that case is, on day one itself, you have prepaid the loan. According to the accounting system, bank gave you 1 crore, you have parked 1 crore in the savings account. Money in the savings account is considered as prepayment. So the bank is saying the loan is over technically. But you can decide to continue to run that loan. So what happens is every month, 67,000 will move from your savings account into the loan account as EMI. You will not be making any additional payment. And over X number of years, this money will completely move and repay your loan. But your EMI will be only 100% principal repayment. You will not pay one single rupee in interest. So this is a very beautiful way for people to make their house a liquid asset. When you buy a house, right, you can't sell one bathroom or one bedroom or one balcony to get some money out. But if you follow this model, right, your house, maybe you can take 10 lakhs out whenever you want for 1 week, 10 days, and then put it also back whenever you want. Okay. So this is like for your life, you have a on-demand loan available. Okay. So there are very beautiful visualizations we have created around this. And probably if you would like to know more, it helps to have context, because in a larger group, probably don't want to complicate the conversations. So wanted to cover the savings, couple of flexibility options that you can build in with this, the transfer costs, the rate of interest breakup. Back to the presentation. Suppose if you want to explore this, what we recommend is you set up a free one-on-one session with us through our website. We will get you quotes. We'll explain this product again for your situation, understand your requirements. We get you the quotes. We typically have all the rate cards, so we negotiate a good deal around that. We'll also help you plan your down payment and EMI. Try and get the paperwork done at your doorstep. We are present in Bangalore and other metro cities, and we'll help you all the way through the disbursal process. That's all from my side. I think I've been speaking for half an hour, so I'll take a breather. Probably over to you, Anand.
Yeah, thank you so much, Jagadeesh. Was mind blown with all the calculations which you showed. We pretty much have certain questions, so we can go to question and answers. And in case if people have any, they can keep on putting on the chat on the question and answers window. So yeah, the first question is from Vineet. How can someone with an existing home loan avail or make use of the overdraft facility? Is the leverage only possible if the loan product you have is a OD home loan?
Sorry, just can you repeat? I'm just trying to find.
Yeah, so I'll repeat. How can someone with an existing home loan avail or make use of the overdraft facility? Is the leverage only possible if the loan product you have is OD home loan?
So yeah, you need to upgrade to a OD product to avail this facility. Almost all banks except Canara Bank and HDFC Bank offer this product. If you want, you can reach out to us on our email IDs or something. We can share the list also out with you guys. Typically, most banks have a OD product. You just have to go and ask for an upgrade with your bank. Typically, on older loans, they hesitate, they don't upgrade. At that time, we can do a cost benefit and tell you whether it makes sense for you to upgrade to a different bank or not.
Yes, Pradeep will be sharing the recording after the session. The next question is from Nani Nukesh. Can we club 2 loans and take overdraft on that?
Yeah, that is possible. Depends on the current market value of your property. Once that is good enough, you can go ahead and do that. You can club, and typically that's a very common strategy for debt consolidation.
Yeah. So next question is from Sri Charan. Can we put the complete loan amount in the OD account if we have all the money? And what will happen to the EMI? Will it get stopped in that case?
So what will happen in that case is the bank will no longer charge you interest. The money from you don't have to pay an additional EMI every month. Every month that money will keep getting debited from your savings account to the loan account. So the EMI will run, but it will reduce in tenure.
Okay, so next question is from Akshay. What is the process of closing home loan OD, and what is the mechanism of making additional prepayment towards principal rather than parking the amount?
So in most OD cases, okay, prepayment and parking money in OD, both of them are same only. You will get the same financial benefit. There is no difference. This is like a prepayment plus withdrawal hack or facility. Okay. The savings will be exactly the same as if you had gone and done a 10 lakh prepayment on your home loan on day one. Okay. So if you ever have money or if you ever want to aggressively prepay your loan, park that money in OD. If you want to just close out, you can always request the bank to reduce your tenure because you're making this prepayment. They will happily do it.
Perfect. Okay, so next question is interest earned in OD account taxable?
So that's the catch. You earn 0% interest in the OD account, but you save whatever is your home loan interest rate because this is considered as prepayment against the loan. There is literally you are saving 7.5 to 8% on your home loan on that savings on that OD account. So you earn zero, but you save 7.5 to 8% post tax return. So it's technically like your OD account earns you 7.5 to 8% post tax.
So next question is from Pratik. Can we take full amount of home loan as overdraft? And which bank has best terms and conditions?
So yes, you can take, okay, the home loan, what you typically get is called a regular term home loan. Okay. When you take a OD loan, it's a feature added on top of it. It's called a max gain home loan or something. It is always for the overall value of the loan. You can't take like 50% as OD and 50%. You will either take a regular term loan or you'll take a max gain home loan. And you can park as much money as you want. And sorry, what was the second part of that question?
Which bank has the best terms and conditions?
Now, best is very subjective. Okay. Depends on how much percentage of funding you want, what type of property it is, what type of land on which it is there. Like in Bangalore, if your land is A Khata property, you will typically get it through public sector bank. But if it's a B Khata property or it has some deviation, then none of the public sector banks will ever fund you. So best is subject to your CIBIL score, current CIBIL score, your actual type of property and the land on which it is constructed. All three put together.
So next question is from Chandan. Are OD loans available on under construction properties?
Yes, this was a discovery for us as well. There are few banks like Bank of Baroda and ICICI which offer this even for under construction properties. If you want to know more, feel free to reach out. Yeah.
Yeah, so with regards to calculator, it is available on website. So yes, Chandan, you can visit on website. So next question is, if you have a home loan at 7.5-ish, what's the difference of ROI in OD based loan?
Yeah. So like I said, if you go ahead and take, now depends, the answer depends on the loan value, right? Now, typically, if you're planning to park 5 or 10 lakh rupees in your overdraft account, then the 0.25% doesn't matter. It will get nullified very quickly. You will actually save a lot of money. But the moment you say you choose a bank like a Bank of Baroda or Bank of India, and your loan is less than 75 lakhs, you will anyways not get. So it is like you getting a home loan at regular rate, but you get the add-on facility for free. So depending on your situation, we'll have to look and decide which bank would make sense.
So next question is, how can salaried individuals avail home loan OD on their name to buy a property in the name of their HUF?
That's a very tricky one. I'm not sure if that is supported. But if you're eligible for a home loan, you'll be eligible for a home loan with OD. Typically, that's the thing. This is just an upgrade on the regular home loan product.
So next question is, I have a home loan overdraft for an under construction property. 15 lakh is disbursed and parked in the overdraft. So I pay only interest. I can close it and cash, but unsure of if it's a smart, as I already hold strong equity and debt exposure, plus a healthy emergency fund.
So if you're already holding it, and now then it's just the question is, there is no interest that is getting charged. If your loan value is 15 lakhs, you park 15 lakhs, you are not actually getting charged over any interest. So what will happen is your loan will keep reducing down over the period. The eligibility also will keep reducing. At 15 lakhs, after 2 years, will come down to 12 lakhs. The limit of your OD will keep reducing over a period of time. Okay, and at the end of, let's say, 10 years, it will completely run down. There is no fun in closing down the loan unless for peace of mind and you want to get your property papers out of the mortgage. There is no reason for you to actually surrender and close the loan. But again, there are other considerations. If you want to sell the property, if you want to do or transfer it or gift it to someone, then probably is a good time. Otherwise, financially, there is no reason why you should shut down your loan.
So next is there a difference in ROI of regular versus OD loan account? What are the other banks that provide this, and what will be the spread between both types of account?
Okay, so a regular home loan will start. So typically, okay, let me start with the banks that support it. Almost all banks like SBI, Bank of India, Bank of Baroda, ICICI, Axis, Federal, I think PNB, Indian Bank, a lot of banks provide this OD product. Okay. The challenge, okay, the charges wise, the additional could be 0, additional could be 0.15, additional could be 0.25, 0.5. It could be anywhere between 0 to 0.5, depending on the bank and depending on the loan value. Okay. So that depending on that month's scheme, you will be able to determine what is that value. Okay.
So next
and
question.
yeah.
Sorry. Next is there any catch in this max gain product? Any higher interest rate compared to non-OD loans, or any locking and loan not transferable to another bank, or no benefit of falling interest rate, just fixed interest rate loan available?
Okay, so fixed interest does not exist. All home loans today are floating rate interest. So so this will behave exactly interest rate wise, whatever is your base home loan, plus a X percentage, 0.1, 0.25, 0.5, anywhere between 0 to 0.5% extra you will pay. And that will be fixed throughout the tenure of the loan. That will not change. What is actually changing will be your base home loan rate, and that will change as per your repo, bank spread, and your CIBIL score. That does not get changed at all. Yeah.
Yeah. So next is this same as HSBC Smart Lab?
Okay, LAP stands for Loan Against Property, and HSBC also has a version of the OD product. So yeah, similar, but this is for a home loan, that is for a LAP. LAP is Loan Against Property, which is post completion of construction. It's not a home loan. You didn't take the loan to purchase it. I think I missed one question on the last part. What are the downsides of this OD product? Okay. Now this product has one flaw, which is this is not suitable for people who don't have discipline. Now, if you think about it, you had money, you've been keeping on parking money. Now you have kind of on a 1 crore loan, let's say you've kind of parked 20, 30 lakhs. Okay. In a normal home loan, you would have done the prepayment. You can't withdraw it. So you'll also not have the temptation against it. Okay. Now, when you have access to 20 to 30 lakhs, sometimes if you don't have the discipline or self-restraint, you might end up withdrawing that money and splurging on something. Okay. If you have money in your bank account, you will have a higher temptation of spending that as well. Now, that's actually a downside of having this. So what we have to do is think through this. Just 1 second. Sorry, started echoing again. So the only downside is if you don't have discipline around this, what you should be doing is not availing this. So if you feel that you don't have self-control in case there's a large amount of money in your account, then probably not a recommended one, because there's an emotional angle to this. And sometimes it's just better to get done with the loan. Okay.
So next is I have never taken a home loan. I want to buy a 3 crore home and I have that money in stock market. I plan to take it out, pay long-term capital gain on stocks and then buy home. Will home loan or home loan with OD makes sense to me? Does it make sense to buy directly by check instead of home? Please explain it easy terms.
Okay, now simple questions. Do you believe in the next 10 years the market will grow at 8 to 10% or more on an annualized basis? Now, this is a question of your belief system and your experience with markets. I might have invested in the last 3 years and I believe 20% returns so I'll get every year. I might have really been investing in markets for the last 15 years and saying, bhai, 10%, 12% you get is good enough. Okay. Now, once you've arrived at that answer, how much you think the market will go up by, then you decide, yeah, markets are not going to go up much. Better withdraw, pay the LTCG and pay off the property. If you believe, no, the markets have a lot more upside over the next 10 years, India is a growing economy, I believe in this story, you remain invested in the markets, you take a home loan and keep paying that money, keep paying the EMI. There is a third approach which we recommend for people typically having employee stock options. So typically this is a very common question. They say I have 50 lakhs in my stock options. Do I sell it and make a builder payment? So what we typically say is, if you expect, and in general, the Indian stock market is expected to grow at least 10% post-tax return over a 10 to 15-year horizon. If that is true, if you believe that, again, I'm not a financial advisor, I'm not giving a recommendation. If you believe that story, what you can do is every month set up a systematic withdrawal from your corpus and pay that towards your EMI. So then you get the best of both worlds. You don't have a lump sum withdrawal from your stock market or from equity into a debt instrument. You also are kind of averaging out the investment.
Next question is, time value of money is not shown in your calculation. If you consider that savings will not be 26 lakhs as mentioned.
Time value of money traded off with what we have done is we have taken I'm happy to chat offline on this. There are different dimensions. The loan in this case gets done in 19 years instead of 25 years. And we have taken a cash flow approach. Happy to debate. My email ID is there. My number is also there on the website. Please feel free to reach out to me. I'm happy to discuss that.
So next is Ishita. What if we put the entire amount in the savings, like say home loan for 45 lakhs, an entire amount is put as savings? What happens to the EMI in that case? In the same context, is there a max limit on the amount that can be kept in the savings?
The max limit does not exist, but since it's a savings account, you can keep as much money as you want, but you will not get any benefit for money kept over and above what is your loan value. So now your loan value outstanding amount, that's something that you should check on your loan account statement. It will tell you as of today, how much do you owe the bank. Take that amount, and if you, let's say, was 45 lakhs, you park the 45 lakhs in that account. What will happen is the bank every month will debit this EMI of yours from the savings or this OD account into your as a principal repayment. Your loan will get done faster. Instead of running for the entire tenure, it will get done faster, and they will not be charging you interest.
So next is, suppose I have taken a SBI Max Scheme loan. Loan amount is 50 lakhs. Tenure remaining is 10 years. Deposited 50 lakhs. Do I keep paying EMIs to the linked bank account for debit every month and it will be deducted from principal?
I would request you to please share me your bank account statement on my email ID. Happy to go through that and help you understand your account statements to understand whether it's working for you or not.
So next is, this money, if I take out say 10 lakhs out of 1 crore of principal out of 1 crore, can it be used for making money in stock market? When we remove this 10 lakhs, is there any interest? As OD means overdraft, please explain this.
Okay, so what happens? It's a two-way street, right? You park money, the bank is waiving off interest. Okay, so you put 10 lakhs in the OD account, so bank is waiving 7.5%. If you remove it, bank will charge you 7.5%. So it is like your loan is now back to the original tenure. So you would have, let's say, put this for a week, then taken it out. You would have saved some tenure. You would have probably saved a week in your repayment. But then if you again put it back, it comes back to that one. You would have saved net some days because of the interest rate. But idea is, okay, the recommendation always from our side is don't mix investment and loans. Our recommendation is always whatever is your safety money, emergency money, what you would have kept in a FD or savings account or liquid funds, arbitrage fund, any of the money kept here, pick that up and park it here. Don't break your investment journey. Investment journey is a separate journey. It has a different risk profile. Take only your safety money. If it is upwards of 2 to 3 lakhs, use the OD account. It will make sense for you. That's the simple recommendation.
So next question is, can we use this same scheme for education loans?
No, unfortunately, this is an asset-backed loan, and this is currently available only for home loans.
The next question is from Padma Shri. Is the OD facility available for NRIs?
I think a couple of banks like Federal do offer it, but there needs to be some clarity. We still don't have that. I don't have clarity on this NRO and NRE accounts. But a couple of private banks do offer this facility for NRIs also.
So next is from India. I have a home loan from PNB Housing Finance. Can we opt OD?
Yeah, PNB offers this. You have to talk to your branch manager to tell him to upgrade to an OD product. They call it OD Max Saver or something. You can ask them to upgrade your loan account. They will charge you a nominal 3,000 to 5,000 as an admin fees, but that is the easiest way. If you have a bank, if your existing bank offers it, please upgrade it with the same bank. If they refuse it, then we can probably step in and help you find an alternative.
So next is, what are the charges for this services for EMI Saver? From EMI Saver.
Yeah. So from our side, we are authorized partners for all of these banks. So we don't charge anything, neither for the session, neither for this entire loan processing support. As we are authorized partners, what happens is we do make an affiliate fee whenever we take business to a particular bank. So that is our revenue model, and that's how we run our business. But what we have tried to do is keep the customer at front. We from our side share all our knowledge without any charge upfront. And idea is, if you like the experience, you would decide to proceed with us. That's the belief.
So next is from Harendra. Not a question, but on emergency fund hack. I transfer my salary to SBI Max Gain Loan OD account and manage my monthly expense from there. It helps to save a lot of interest amount.
Sorry, you went a little fast. Can you please repeat?
So it's not a question. He is just sharing his hack. So what he is doing is I transfer all my salary to SBI Max Gain Loan OD account and manage my monthly expense from there. It helps to save a lot of interest amount.
That's a very good hack. That's actually a very efficient utilization of money in their savings account. This is what individually a lot of people have come up with very interesting and smart ways of managing their money. What we have done is over these 250 sessions, learned it, we created a repository of it. So that's all that is there is to it.
So next is from Vishal. Do you allow empanelment with you so that I can assist my clients on home loan solutions with your help? If yes, what will be the revenue sharing? I think so you can take this offline.
Please feel free to reach out on us on our email ID or on our website. Contact details are there. Happy to have.
Sorry to interrupt, but to answer Padmashri's question on is OD facility to available for NRIs? Yes, it is available for NRIs, but it's only available on NRO accounts. Because in NRE you can repatriate the money. In NRO you cannot repatriate, so hence it's only available in NRE.
Yeah, there was this one closer confusion I also always have between NRO and NRE. So
yeah. So next is, suppose I have taken an overdraft home loan for 15 years and I am paying EMI of 85,000. Can I request the bank later after few years to extend the home loan tenure and reduce the EMI?
Okay, so here it gets tricky. When you have an existing home loan and you say I want to increase the tenure, the Bank will do it. There's no problem with that. But the credit bureau, CIBIL, which actually underwrites your scores and everything, they will look at it in a negative fashion. What they will say is, ki, here is a person who committed to pay a particular EMI and now he's telling he's not able to afford and he wants to restructure it. So probably this guy is in a tough situation. So it actually downgrades your CIBIL score. So if you ever have to restructure your loan or change over the EMI, right, tenure, always try and do a balance transfer. It just preserves your CIBIL score.
So next is, there is a notion that I can make 12% if I invest the amount in markets instead of parking in ODs at 7.5%. So why use OD instead of investments in market?
Perfect. That's the exact difference between a risky investor and a conservative investor. Okay. And the difference is also this, that this 7.5% saving is guaranteed. 12% return in the markets is not guaranteed. If you had invested exactly 1 year back, today you would have been sitting at 0% return. Okay. The year before there would have been 20% return, but last year to this September, the actual difference in Nifty is actually zero. So markets are uncertain. You could make plus 20-30% or minus also. Here in OD, the saving is guaranteed. So our recommendation also is keep your investment strategy separate. If you keep some money for your safety and emergency purpose, that number is greater than 2 to 3 lakh rupees, keep it here. If you keep money in FDs, RDs, liquid fund, arbitrage fund, anything above this is a risky proposition with high risk, high reward. Don't mix investment and this journey.
So next is Vinay. I have an overdraft in SBI. However, even after repo cuts by RBI, banks did not decrease the interest rate when I reached bank. They said it old loan account, MBLR, and charging some money 3,000 to move to MCLR. What should I do now?
Easiest answer for you is okay. So typically it's okay. There are two things that you can do here. They are mandated. This is SBI, right? He's mentioned SBI, correct, as a loan provider.
Yeah.
Okay. Now you have to check whether this was SBI Bank or SBI Home Finance, which actually provided this loan. If it is SBI Finance or something like that, which is an NBFC, they are never mandated by RBI to reduce the rate of interest. Okay. The only thing that you can do is move your loan from a non-banking financial corporation or a finance company to a bank. Okay. Now the second thing, if it was with SBI Bank itself, okay, they are mandated by RBI to change the rate of interest. So look up your loan agreement or the sanction letter. It will be there in your email. See what the formula written is. Is it repo rate plus something, or is it some? It is called MCLR, marginal cost of lending, which is a different formula for calculation. If you are on that, then it's better you pay the 3,000 to 5,000 rupees as admin fee and get yourself changed to a repo linked lending rate. So you'll always get the benefit. That is the best one. The last thing, if they don't agree to any of this, first threaten them that you will move out. The fourth option is you actually move your loan to a different bank, because the new bank will always offer you at least a good rate of interest.
So next is from Harsh. Godrej Capital offering adjustable EMIs in under construction properties, where you can adjust the EMI amount as per your need for initial under construction period and then increase the EMI. Is it recommended to go for such loans or take loans from PSUs only?
So first thing, Godrej Capital is an NBFC. Okay. So unless your loan is not funded by a bank, don't go to an NBFC. Simple logic being, bank will always have a lower cost of money. So they will always offer you loans at a cheaper rate. Second, banks are linked or governed by RBI, and their home loan rates are repo linked lending rate. Okay. Here what happens, NBFCs can charge on MCLR, like I explained in the previous case. So if whenever RBI reduces the rate of interest, right, NBFC does not have to reduce the rate of interest. So it's always better to take a loan from a public sector bank. If they don't fund it, go to a private sector bank If they don't go, then go to a reputed NBFC, and lastly go to smaller NBFCs. Okay, this is the chronological order in which you should apply or approach the lenders. Because in the longer run, they will, as you keep going down this hierarchy, you will always find them to be more expensive. Lastly, on
Jagdish,
this, yeah,
yeah. So sorry. Please continue.
I was saying the last part is the design your EMI feature that Godrej Capital launched. Now, what happens in this is, if you don't understand the product, you don't understand the implications of the product. I've had a very good friend of mine who actually ended up opting for this, and they kind of got stuck in a big problem. So, because what happens is he was supposed to pay an under construction EMI of 1 lakh, and they offered him that you could pay only 25,000. So he was happy to pay 25,000. But what happened was the additional 75,000 got added to his principal on a monthly basis. After 1.5 years, he was sitting on an additional loan of 20 lakh rupees. Okay. And then suddenly he couldn't afford the EMI, nor he could make the payment of 20 lakh. So I'm just saying, if you don't understand the product, don't sign up for it. And a main reason why OD products also haven't taken off is people don't understand it. What we are trying to do is give you the tools to understand it. And once you understand it, hopefully you adopt it. That's the thought.
Jagdish, if you could, tell the audience. I remember we did a story on when should one approach a private bank and a public bank, based on if it's a reputed builder, maybe go to a PSU
Yeah.
bank which offers a lower interest rate. So
Yeah.
it's an interesting nuance. Please explain.
Yeah, sure. So, okay. So typically when you take a loan, right, there are two dimensions you should look at. One is the type of property, the type of builder and land. I take an example of Bangalore. Like let's say in Bangalore, you're looking to buy an apartment and you are a salaried person in a good company. Okay. So once you are a salaried guy in a good company, salaried person in a good company, typically there's an income check and then there is a property check. So once you say you are a salaried guy a salaried person in a good company with a steady paycheck, your income eligibility and criteria will usually get ticked up. So you will be eligible with almost all category of lenders. Now on the other side, there will be properties which are built on ek khata or land which has no dispute, and then there is land which has some dispute. Now public sector banks will always be the cheapest ones, like I was explaining, lowest cost of fund. So they will fund the safest projects, but they'll give you the best rate of interest. So if you have a grade A builder, which is let's say a Prestige or a reputed builder, a Shobha or a Brigade, any of these builders, and you have a good income profile, then you should always go towards a public sector bank. They will give you the lowest rate of interest over the longer horizon. So in general, it's like a 2x2 grade. Grade A builder, good income profile, go to public sector bank. Grade A builder, income profiles, like if you're self-employed or you recently don't have a great CIBIL score, probably a private bank. If it's a grade B builder or the land has some disputes, you probably end up going to a private bank or an NBFC. If your income profile is also not that great and the builder is also not that great, the only option you will have is an NBFC. Like typically when you move on the outskirts of the city, where there is a panchayat land or a village land or something, without the proper property documents, NBFC is your only option. So depending on the bucket in which the property lies and your own income profile, there's a certain segment of right bank that will suit you. So that is what we typically help you uncover in our sessions.
Next question is from Karan. Does the home loan interest rate and OD interest rate remain the same in max gain loan product if I have to park the same amount in OD as the amount of loan taken?
Sorry, repeat. If the OD...
Does the home loan interest rate and OD interest rate remain the same in max gain loan product if I have to park the same amount in OD as the amount of loan taken?
Yeah, see, the home loan rate of interest and OD rate of interest is fixed at the time. There is a formula to calculate it. The formula will not change. The parameters of the formula will change, like repo plus spread plus your CIBIL premium plus the OD surcharge. What that will not change. The values in each of these components will change. It doesn't matter how much amount you park in it. If you park 1 lakh also, or you park the entire 1 crore also, it will still be the same.
So next is from Lalit. Does OD limit reduces across tenure of the loan?
Yes. What happens is, as the loan progresses, money. See, at the start, the OD limit will remain constant. If you're not paying that money through the OD, the limit will continue till the end. Now, let's say in that 1 crore product, the final amount left in the OD account is still 10 lakh rupees. So in that case, the 10 lakh access to the 10 lakh still exists till the end of the loan. That limit has not reduced. But some banks have a different variant of this product in which the limit will also reduce. So it depends on the bank. I cannot make a generic comment on it.
Yeah. So next is from Siddhartha. Any decrease in repo rates is passed by same quantum and at the same time for a normal and a OD loan. Second question is, in your experience, which banks has generally passed on the decrease in repo rates the quickest?
So see, there's no standard answer. Typically, within a fortnight or a month, every bank has to pass it on. Banks don't have that option to carry forward because they have to, at the end of the month, they have to still report it. So banks are mandated. Some will be a little more proactive, some will be a little, but within a month, almost all banks, as they are audited, have to pass on the benefit. There is no debate on that.
Next is from Noel. Is it better than loan against mutual fund? If yes, how?
So, okay, loan against mutual funds, I think you get, let's say you had a collateral of 1 crore, you can get only 40 to 50 lakhs. And I think the rate of interest will also be higher. It will be at 9% or much more than that. So it kind of always makes sense. And the repayment tenure also is not going to be very high for you. Here you are talking about a 25, 30-year loan. So this translates roughly into, on every 1 lakh of loan, you're probably paying 1,000 rupees or 800 rupees. There, for every 1 lakh, you're probably paying 2,000 or 3,000 rupees because of the lower tenure. So just by the tenure, you get a very good advantage in terms of how much you can, kind of borrow.
So next question is from, anonymous. Does the calculator also takes into account the tax saving in ITR returns? Will the benefits reduce a bit more due to no tax benefit or due to no loan interest part for someone who has parked full amount in a OD?
So, okay, the way you have to look at it is tax saving happens on an expense that you're incurring, right? You paid 8% interest, and on that 8%, some part of it, because it's capped, it's not unlimited unless it's a let-out property. So on an 8%, a small portion of it, so it's probably a 0.5% saving. But whereas in an OD product, you're saving the entire 8% interest itself. So what we typically believe in is that the tax policy is changing. Now up to 12 lakhs, anyways, there is no, if you opt for the limit, there's anyways no benefit on this line. So in general, the policy making also is going towards trying to not save tax, but actually encourage spending. You can sit down and do the calculation, but the answer is very complex. In general, what we have always felt is that it makes sense to just save that money upfront. And whatever is that, we can probably, if someone is interested, we can take a stab at it. But in general, ballpark, it doesn't seem to be tax to be a very big consideration in this.
So next is from Karthik. Can we stop our EMI in OD loan after we completely repay in OD loan?
Yes. So what happens is, like in this case, 90 lakhs, once it got prepaid, you still have 10 lakhs left in the OD account. So the bank will then ask you, do you want to close the loan? See, you owe me 10 lakh rupees and you have parked 10 lakhs in the savings account. So I can take this 10 lakhs and close it. You can say, okay, or you can let it run down. That option always exists at your disposal.
So next is from Raja. What happens if I remove all amount from OD account and is interest higher or what happens if I remove all amount from OD account and is interest higher or disadvantages of OD?
So like I said, makes complete sense. If you have some emergency money is supposed to be carried throughout your life. Emergency money is not like today or tomorrow I will keep it. So if you have emergency funds and that funds are more than 2 to 3 lakhs, makes sense. Otherwise, don't opt for it. If you don't plan to keep money, then it does not make sense. Your investments will always give you better returns. So if you have the culture of saving money in emergency or keeping funds aside, and that is earning less returns, take that money and park it here. Apart from that, if you don't have, and if you are a person who believes that I will put 100% of my money in the markets, then this product is not for you.
So next is this available in HDFC Bank also?
HDFC Bank, Canara Bank are few of those banks which don't offer this. So you will have to transfer your loan out of these banks.
Okay. Yeah, with the recording will be shared, or it is also uploaded on YouTube, so you can visit from there. So next is again HDFC. Next is from Rahul. Once you move your home loan to an OD account, can we again revert it to a normal home loan if we are not able to maintain enough balance?
You can definitely put a request to downgrade the account. It's not a one-way thing.
As of now, HDFC does not offer home loan OD facility. Since this is an overdraft facility, only banks can offer this, and NBFC cannot offer. Hence, LICHF, PNBHF, and HDFC Limited earlier were not able to offer. Last year, HDFC, hence expecting HDFC Bank to launch soon. Okay, not a question. I'm planning to buy a property worth of 2 lakhs. What is the maximum amount of loan I can get?
So for how much value?
2 crores.
Okay. So typically, the RBI mandates that you can take a loan of 75% on a value of 2 crores. So 1.5 crores is what you can conventionally get as a home loan. There will be certain banks which will go up to 80% or even 90% of the funding. So for example, a Bank of India can provide you, depending on the builder and the project, 90% funding, which takes it to 1.8 CR as well. Over and above this, you can ask for additional funds as a personal loan as a additional funding for, let's say, interiors or renovations. You can say, I need another 10%. So that will take the entire thing almost up to 100% value of the property. But again, this is all subject to certain builders and the property's market value. Based on that, there are permutations and combinations that need to be worked on.
So next is from Ishita. What is the documentation required for converting normal home loan to OD account?
It's the same one. If you're doing it at the same bank itself, let's say you had it with SBI and you're upgrading it with SBI itself, what we recommend, you have to just visit the branch and make a request for it. There is no additional paperwork. They'll charge you an administrative fees of 3,000 to 5,000 rupees. That's it. If you have to do it at another bank, it's the entire journey again. You will have to submit your KYC documents, income proof, property documents, and it will be the entire journey. That's where we actually step in. Like if you have to do a transfer, we try to simplify the process for you.
Okay. So next is from Nishchay. Does the bank calculate and reduce interest in OD on a daily basis?
Yes. Every day, whatever is your balance on that day, since it's a savings account, right? They can't take an average balance. So what they do is they actually calculate the interest that is to be calculated on a daily basis and add it on a monthly one. So it's actually very beneficial even if you keep money for 10 days, 20 days, 15 days. Any money in your savings account is saving you interest.
Yeah. So now we are at the end of the questions. So the last question is part prepayment allowed in OD?
Yeah. Again, some banks have restrictions, some banks don't. But in general, if you want, you can do part payments. That's allowed.
Yeah. So yeah, we are at the end of the questions. Thank you, Jagadeesh, for answering everything with patience.
Thank you so much, Jagdish, for this very super insightful sessions.
Okay, sorry,
Thank you so much.
there's one last question which I missed. What is, just a second, what is arrears deposit in OD loan account?
Never heard of it. Probably if you could just share me a little more details, I can probably understand it. Probably you're referring to a different term in this context. Happy to connect and
Okay, perfect. So we have posted our email ID also. In case if you have any questions, you can write it to editor@thefynprint.com. And in case if you want to get connected with Jagadeesh, the company's website is emisaver.com. You can directly connect over there. Thank you so much for joining, everyone. Thank you, Jagdish, for your time and for your valuable insights.
Thanks.
Recording will be uploaded on YouTube also, so just wait for a day or so in case if you want.
Thanks, guys. Thanks for sticking around till the end. Hope you guys found it useful. Feel free to reach out. Look us up on our website or on LinkedIn. We're very active there. Thank you, guys.
Thank you, Jagdish. Thank you, Anil.
Thanks, Anand.